The Managing Director and CEO of the Asset Management Corporation of Nigeria, Mr. Ahmed Kuru, has urged stakeholders to be diligent in the recovery of debt. That's what the Amcon is all about. Kuru spoke earlier at a press briefing in Lagos. Let's take a listen to that.
A child of necessity is basically like an SPV, which was set up as a result of the financial crisis of 2008, 2009. Governments all over the world, which most of you are familiar with, set up organizations to help jumpstart the economy. In Nigeria, at that time when the government realized that there were issues with the financial system, the banks, most of those loans that were with the banks had gone bad, and the non-performing loans, the ratio was in excess of 40%. They realized that there must be a model which will bring more liquidity into the economy, to jumpstart it. And they also came up with this asset management framework, which was also familiar in other climes. And the basic objective was to buy the loans from the banks, provide the liquidity to the banks so that they can on-lend, to their customers. And by doing that, they were able to protect the financial institutions. They were able to protect more than 300,000 jobs. They were able to protect more than 3 trillion customers' deposit. And then they provided liquidity to the banks. And at that time, if you recall, bonds were raised, in the market, with which, the loans were purchased from the banks. And the banks were asked to transfer the loans to Asset Management Corporation of Nigeria, Amcon. And then a law was enacted with special powers to follow up and recover the loans. So basically, the main objective then was to collect loans, collect the debts, look at the assets, recover the assets, and dispose, the assets, and pay back the debt. So these are the only main objective at that time. And gladly, Amcon at that time, they were able to purchase the loans. The bonds were raised, and the banks were generally, protected. And then the idea at that time was from the recovery, Amcon would be able to raise up to 30% to pay back part of the bond obligation. And then from contributions which the surviving banks agreed, including Central Bank of Nigeria, they will be able to raise 70% to pay the bond. At that time, we raised bond worth 5.6 trillion, with which we are able to bail out the banks. Along the line, when Amcon started operating, there were need to further amend the law, because there is no law that is static. As we are recovering, the obligors gets more wiser. We go back, to the drawing board to get the law amended. And the law was amended about 3 times. 2010, that was when the original one was enacted, but 2015, 2019, and also 2021, we subsequently amended the law to reflect, the current reality. And at the beginning, we purchased almost 12,700, loans from the banks, and we paid 1.8 trillion. And then there's also financial accommodation of 2.2 trillion. In other climes, what they've done was to appropriate some money to support, the economy due to the financial crisis. In Nigeria, actually, we wanted to do that. There was a plan to provide 500 billion naira every year, for like 3-4 years to support that. But unfortunately, that didn't happen. So there was a financial accommodation of about 2.2 trillion, which was added to the 1.8 trillion that we purchased from the banks, and then bonds were issued, believing that the collateral value at that time was around 3.3 trillion. So it will cover up, for the shortfall. Usually because of rate of inflation, the value of assets normally goes up above the rate of interest rates. So that was that, assumption at that time. So the loans were purchased and then they were domiciled with Amcon, and Amcon was mandated to, start the process of recovery. We've done quite a lot in the recovery process. We have so far recovered more than 3.9 trillion, both from the sinking fund, that is the contribution from the banks, and from the recovery, we've made almost 1.4 trillion. Now, if you situate that against the fact that we only paid 1.8 trillion, if it's just simple arithmetic, you will see that the recovery rate is more than 70%. But unfortunately, because of the structure, the loans were purchased from with bond that were issued, and the face value of the bond at that time, like I said, was about 5.6 trillion. It presupposes that there's interest element of it. Now, the tragedy of the whole thing, or the situation, is that as you are recovering, there's also interest element, because the loan that I purchased 1.8 trillion also is attracting interest, averaging around 11%, because I have interest that I'm also paying on the bond. So the rate of interest accumulations sometimes goes faster than the recovery. Because as you are recovering, if you're able to recover, hypothetically speaking, 100 billion 1 year, on your bond of 5.6, the average interest that you pay is 250 billion. So for you to be more effective, it has to be 250 plus. And that plus will assume that it should take care of the principal repayment, which originally it was tagged for 10 years. Because when you hear the sunset, wind down, and all this stuff, it's all tied to the funding plan. Because the original funding plan was 10 years. And then there was this assumption that the banking industry will grow at a rate of 20% year in, year out. And then because the sinking fund is tied to the size of the balance sheet of the banks, so it was assumed that the economy will grow, or the banking industry will grow at the rate of 20% yearly. And unfortunately, we all know that for the first 7-8 years, the growth in the banking industry is far less than 5%, because the economy was also struggling, from 2008, 2009 financial crisis. So out of the 3.9 trillion that would have said that is the total collection, you find out that the interest side of it alone is around 1.8 trillion. Only interest alone. So the principal really is less than that. The principal repayment is less than 35%.